No coffee, no water. Hey, sorry I'm late. I was putting on my makeup. No, actually, you know what happened? I sat down with the dog on the couch, fell asleep. That's the truth. But must have been a much needed sleep because I feel friggin' great right now. All right, what time is it? It is 11:50 here, Eastern time on the East Coast. I used to say the Eastern Seaboard, but that would be lying. So I have to come up with some other. What is the Eastern Seaboard? What does that mean? Well, today it doesn't matter, but I'm curious. I mean, I've got this kind of ADD. Something comes into my head, I need to know what it means. Seaboard. What does seaboard mean? They just can't give me a simple definition? No simple definition. Maybe I put that on, maybe I look in the dictionary. Seaboard. A region bordering the sea, the coastline, the eastern seaboard of the U.S. See, and they actually put that in there as a reference. The eastern seaboard of the U.S. I like to imagine that I'm on the ocean. Maybe what I should do, and this would all fall into place here. This would be beautiful. So what I need to do, instead of having this boring background back here, I need to have the eastern seaboard in back of me. Anyway, while we're here, might as well take a look at Bitcoin and the futures volume profile. Oh, that's the title of this stream. Volume profile market analysis. Now I know why I'm here. Okay, I'm ready. Well, let's start with volume profile. Here we have Bitcoin. Let's start with Bitcoin in volume profile. Here we have Bitcoin 4-hour chart. We're definitely in the middle of breaking down from this massive bear pennant. Massive bear pennant. Here, I'll show you. I'm sure you want to see. There's the pennant right there. I'm not going to draw the flagpole. If we went into the daily chart, you would see it is a huge flagpole coming down from about 6,700. Then, of course, a lot of people thought this was an inverse head and shoulders, but those people are friggin' idiots. We've broken down out of the pennant, and we've created another bearish pennant. And we're coming to some conclusion. I believe we're going to break down from that, which is just another continuation of the breakdown from the big one. Everything is fractal in nature, by the way. So when we originally came down, I said, hey, this looked like a bull flag. And then we broke down from that. And then I said, hey, this looks like a bull flag. And we broke down from that. And then we moved up in this massive whale-induced rally. And people got all excited that we thought we were going to go to the moon again. Lambos and hoes for everybody. And then we broke down again, and then we formed this more consolidation. I said, hey, that looks like we're just forming a beautiful consolidation. And that's what we were forming. And then we had this other breakout here, and people thought that was a break up, a break of the bullish pennant. The bearish pennant. Now we're going bullish. At least this is what the moon thought and a few other people. Of course, they're all cucks, idiots, soy boys, have no idea what they're talking about. As well as Tone Vase, who thought we were going bullish again. That guy just, man, he flip-flops so much. Anyways, here we are, breaking down again. In the meantime, in the volume profile world, we're starting to build up a fairly well-defined profile, or what some people in the industry would call a balance. And we're right on the edge of that balance, and it looks like if we compromise that, we will move down pretty sharply down to this next balance. I don't think it will hold us, and we'll continue moving down. Perhaps I think to about 3,100 or so. Hey, those are the cleaning people. Leave them alone. How you doing, puppy? It's my good boy. Good boy. Bark at the cleaning people. So there we have Bitcoin. Bitcoin is going down. It's going down. I won't make you suffer through my attempts at singing. All right, let's take a look at here's Bitcoin. Bitcoin is down off the charts. And now what we have here, this is the ES, the E-mini S&P futures contract. And if you remember, a little while back, let's see, about 1, 2, 3, 4 trading days, that would make it like Wednesday or Thursday of last week, I showed you this chart and I did a little volumetric analysis, drew these blue and red lines and everything, and said that we were going up, that we had hit this pattern here. What was that friggin' pattern? It was a Bulkowski pattern. I am so into patterns. It was a Bulkowski candlestick pattern. We need the visual reference. It was the advanced block pattern. So it was the advanced block pattern. All right, high percentage advanced block pattern. All right, and that's what we see right there. What happened to my draw and screen thing? Do I have to reinstitute it? Let's try that again. Right there. That was the advanced block pattern. And then I said, hey, we're going up. All right, but just where are we going up? Nobody knows. Nobody knows. Nobody knows. That reminds me of Ren and Stimpy. Nobody knows where the left sock goes. In reference to how, one of your socks out of a pair always disappear. You damn it, you put it into the dryer, the washing machine, the dryer, and it never comes out. It's gone. Nobody knows where the left sock goes. All right, so let's zoom in on this a little bit. So we have some of these other longer term. These blue lines are the edges of volume wells, and they represent support and resistance. And we've come right up and we've touched that resistance line that I drew several days ago. Touched it! And then got rejected. Touched it, rejected. And I believe that we are seeing a temporary high here. We may come back up and touch it again. Nobody knows. Nobody knows. We may come up and touch it. We may enter into this high volume node here, churn a little bit, and I think we'll find an effective short right about at the top of this. All right, let's draw another line. We'll make it 1274. So there is the distinct possibility that we will move up to here, and then that will be an excellent place to take a short down to here. That is a well-established volume profile pattern. Another possible pattern is to move straight down to here. Then churn on this node here. Actually, what's more likely to happen, well, churn on this node. But I think what's more likely to happen, we come right down to that line and then move up quickly again up to here. That's the parent-child node pattern, where you come up, string through the parent, come down, hit the child in the eye, say, "Sorry, you're grounded," and then come back up and meet the parent again to where reality sets. And this is the high probability pattern that I see. The other possibility here is that we take a shortcut. That this resistance here, or this resistance here is just too much. We hang out on this volume node. This big red line represents a big volume node from a outside time frame, a higher time frame, maybe a weekly, or if I bring in more data. So there is a big volume node right there, right at that level. And then we move up. So there's the alternate scenario. Let's see, we'll move these over like this. And then the alternate scenario is that we then move up to here like that. All right? So here's scenario 1. Scenario 1. Ooh, that's horrible. That's scenario 1. And then down here is scenario number 2. Both of them are bullish scenarios. Do I have a bearish scenario? One would think that I should have a bearish scenario. A binario. Do I have a binario? Do I have a binario from here? Is it possible, for instance, that we just go down from here? Of course, this is a possibility. We could go down, perhaps down to here, down to 2520, 2519. I think that is a binario. A binario is a bearish scenario, by the way. I just made that up. It's a new technical term, binario. Then I guess the opposite of that would be a bullario. There we go. Binario and bullario. New technical terms from the Trader of Futures. I give scenario number... Bullario. I give Bullario... Let's give Bullario a percentage. This one is probably the the 65 or 2/3% case. All right. That's where we move right up here, move down to the child node up. The scenario number, let's see, is that right? No. Scenario number 1 is we come right up here where we're at now. We move down a little bit, and then we move up. Yeah. That is Bolario number 1. What I need to do is I need to color code this. Otherwise, everyone will be confused. All right. So Bolario number 1, we'll call that gotta get this spelling right. Bolario number 1. Let's see. Let's make that. We'll make that Bolario a nice. Well, we'll keep it the fuchsia. Fuchsia, right? And then we have Bolario number 2. We want to make Bolario number 2, I don't know, a nice green. That looks like a puke green. How about a deep blue? Deep blue sea. No, we don't want deep blue. I don't like the colors. How about orange, like Orange Man? A little more deeper orange, a little burnt orange, man. All right. So this will be part of Bolario 2. Yeah, there we got it. That's the ticket. All right, so we got Bolario 2. This here is Binario. You got that? This one is Binario number 1. And we'll give that like a, I don't know, a deep red. Like blood red. There we go. That's not deep enough. And there's Binario number 1. It's too much like Bolario number 2. Shit. All right. Well, we'll just have to live with it. Boots of Leather wants to know, I'm curious, how low can we go? We can go so friggin' low. So low! Of course, we can go all the way down. All the way. Of course, anytime. That is the excitement of being in this business. At any time, we could go to the depths of Hades, River Hades, and swim with the sea of damaged souls. Are they damaged? Or, tortured souls. Yes. We will go down and we'll swim in the sea of Hades. That's how low we can go. But right now, that's not going to happen. Right now, we have We have a different story. We have a VIX story to tell. Let's take a look at, that's natural gas. Let's take a look at the VIX. The VIX futures. Look at this. Look at that drop, man. We went from, not nosebleed, this is more like scrape your ankle high volatility, and now we've come back down to normalcy very, very quickly. Very quickly. And this makes it very difficult for us to, well, for one thing, the AI alerts, the embodiment. Sorry, I need to come back to you. The embodiment, the AI, the neural network that we employ here at Trader of Futures, the embodiment is taking a break. It's saying, yeah, we did some really good stuff here, Ern. Really good stuff. This volatility was friggin' awesome! But now, we need to take a break. We need to take a break, stretch out our arms, and revel in our magnificence, and then come back for some more. That's what happens when volatility drops like that. That happens mostly with just about anybody, any systematic trader, especially any kind of discretionary trader. But systematic trader and automated systems, they take a break. Volatility drops, volume will drop, and then we all sort of decide, where the hell did we come from? What do we do next? We need some more controversy. And controversy is brewing. It is absolutely brewing. I think on the geopolitical scene, it's starting to, we are settling in, we're coming to a new volatility low. This creates potential for high volatility. And with high volatility and any kind of volatility, motion creates opportunity. And so I suspect that we're going to have some more opportunity, but it's going to be to the upside, not to the downside. Maybe a little churned a little bit. Maybe we'll, pull back a little bit, create some of that, and then, it's another technical term. Maximus likes Bolario and Bernario. No, it's not Bernario. That's too hard to say. It's Bernario. And although Frank calls me a freaking idiot, he agrees. Are you still doing CBD for the pooch? Apparently you didn't hear. Neo passed away last Friday. Apparently a tumor in his gut let go, and he was unable to recover from that. It's very sad, and we all love him. Prefer not to talk about it, but let's move on. All right, so where are we? Should have started on time. There's only 20 people here. Shoulda, woulda, coulda. Should have announced it. Should have put it out on social media. But while you're here, you could go down and hit the like button. You could like this analysis. This analysis is tops. So you get the market scenario. You have Bolario number 1, Bolario number 2, and Bernario number 1. I would give Bolario's 65 to 75%, and Benario the remainder, 25 to 35%. That is based on my my new updated market bias, which is now bullish in the medium term. Long term, it's always been bullish. Medium term, definitely bullish. Very short term, kind of neutral. All right? So bullish, neutral right now. Where before I was bullish. Now I'm bullish, neutral. I may get bullish, neutral, bearish, or bullish, bearish, or bullish, neutral, bearish soon. But I don't think so. I think we're staying on the bullish side. More bullnarios or bullarios. Yeah, you have to add the N on the bear because R is a soft consonant. R. It's not like la. La is a little bit more hard than R. So we have bullario. You could do bullnario and bearnario, or bullario and bearario. Beararios, that doesn't work. Anyways, let's take a look at some of the other stuff, the other shit that's going on here. Let's do a little bit of more advanced analysis. And what I have here are some relationships between interest rates and indexes. So in the green, those are the indexes. You can see that we had a nice strong move up today. We've pulled back. I drew this a little earlier. But we had a nice strong move up today. And then down here in the lower left, in the middle, is the relationship between the Dow and the S&P 500. So super big caps versus big caps. And you can see, and this is a daily chart or 4-hour chart over about 2 months' time. You can see that while we were very, very bearish, that the big caps were outperforming the not so big caps. And then as we started to turn around and then go bullish again, the not so big caps started outperforming the big caps. So money was essentially flowing, right? You can also look at it that way. The upper left here, these are notes, or the Treasury notes, the 10-year, and on the top middle is the Treasury 30-year. So we have shorter term versus longer term. Notes over bonds, 30-year bonds. Notes over bonds. And then on the lower left is the NOB spread, or the notes over bond spread. And you can see in the same time period as the market in the lower middle that while the market is going down, notes over bonds, notes are dominating longer term. Shorter term or mid-term is dominating longer term. And in effect, interest rates are going down. So when you see that spread, that's essentially what you're seeing. Interest rates are going down. And now that we're getting more bullish in a bullnario or bullario scenario. I like that, a bullario scenario. Interest rates are now going up as notes are now dominating. So first, bonds or long bonds were dominating medium notes. And now medium notes, shorter term interest, is dominating longer term interest. Okay? That's what that's saying. What do you make of that? I like that chart. That's very cool. I like looking at the relationships. And you can trade these relationships. And what's really cool about trading these relationships, what we call spread trading or statistical arbitrage, is that when you trade those and you're using margin when you're trading these futures, when you use that margin in certain brokers, if they do it, Thinkorswim doesn't do it because they're weird. But Interactive Broker, TradeStation, and most other brokers will give you a huge discount because they recognize that as a hedged position. And the cost of trading a pair like that in an arbitrage is very, very little with very big reward because you're dealing with futures products that have intense leverage, 25 to 40 to 1 leverage. And because you're trading them as a pair, the broker will discount them dramatically, 70, 80, even in the case of the indexes as much as 90%. So the cost of putting these trades on is minuscule. Minuscule! It's freaking awesome! It is so awesome! Yeah, most people don't really understand just how awesome that is. It's like free money. It's like letting the casino bet with their money. That's what it's like. That is what it's like. Of course, you take all the risk as well as the profits, but you don't use much of your money. You don't have that risk of margin call or anything like that when you pair trade. Most people, when they just trade futures, they don't do that. They just trade either bullish or bearish, either in a bullnario or a bearnario, or a bullario and a bearnario. Yeah, I got to get that right. And when they do that, they just add up the margin and add up the risk. And then so the broker's going to punish you for that. They're going to say, look, if you drop down a certain amount, we're going to cut the tips off, man. You don't want to cut the tips off. It'll cost you. Cost a lot of money to replace a tip. A whole lot of money. So Crypto Shill wants to know, so with that equation, when bearish S&P and Dow, the shorting of knob is always a go. Yeah, we would, yes, in general. That is correct. That is very correct. Boots of Leather. The Bolero sounds like a bar Jimmy Song and Tone Vase get together for a date night. Because they're butt buddies. Yeah. All right. Let's take that out of there. Relationships are so cool. It's a very, very cool way to trade the market. All right. I have something else here to show you in this lower left. And this is with oil. Now, we have a target for oil of 54.50, and some people are wondering, well, how did you come up with that target? Mr. Trader of Futures, where'd you get 44.50? And I'm going to talk a little bit about another Bulkowski pattern. Well, it's not his pattern. This is a well-known cup and handle pattern. The cup and handle pattern is a continuation pattern. And oil has been moving up after a long, long, long move down. It has decided to move up again, and now it's taking a little breather, and it's created this beautiful little cup. And now we have this handle and a neckline. All right? And the way you estimate the continuation, the measured move for that cup and handle, is you measure from the neckline down to the trough of the cup, or the bottom of the cup, where all the sediment is. And then you take that same height, and then you add it to the neckline, and then that is your target. Now, that's one way to look at it. All right. The other way is that the AI, the embodiment, told us about this, gave us those odds. Another way is to use... Could we use volume profile here? Let's take a look at that. Let's see if that matches up with volume profile. Wouldn't that be friggin' awesome if that matched up with volume profile? That would be like, whoa! There's something to this shit. We have to zoom in on it. We need more data. Oh, yeah, look at that. Holy crap. Holy criminy. All right. So what I'm going to do is I have to draw some lines in here while I have all the data in there. And you'll see that there's a low volume well right about here. Right on the edge there. Right there. It seems to coincide with the tops here. Which is another way to look at it. You know, you could look at those tops and bring it over. But it's right about that area, that 4450 area. So we've come up, we've created in this nice big volume node, we found resistance at this other volume well, right at the edge of the volume node, right there. Right? And it looks like we're going to come back up to here. Now, when we come back up to here, I have no idea who this is. Let's find out. Hello. It's a robocall. Barry's asking me if I'd like to become financially free. No, I don't. I want to be a slave. All right. So there's another way to look at it. Strong resistance right at the edge of a volume well. You know, actually, from a volume profile point of view, it would probably be closer to 5490. All right. The measured move measures up to 5450. If you were to use traditional technical analysis and take these tops, that probably will give you something closer to, I don't know, 5425 or whatever. Who the fuck, you know, who's going to friggin' argue over, you know, 10, 20, 30 cents? Let's just put what we'll do is we'll put like an area. We'll say, this is the resistance area from here to here. The resistance is right there. All right, so now we can zoom in a little bit. We make it a little deeper to make it look like a cup. And there we go. And so there we go. There's oil. It looks to me, using what I used there was like, I don't know, 3 or 4 different types of analysis. I used volume profile. I used the AI, the embodiment. Oh, that's not analysis. That's this smart computer dude that just tells us what to do. I used traditional technical analysis with the chart pattern. And it's all pointing to the same thing. All pointing to the same friggin' thing. That oil. Oh, I don't want that. Let's see. I want an arrow. I want an arrow. Oh no, first I want a neckline. I want a horizontal line, which is right about there. Whoa! That's a horrible horizontal. I don't want that line. I want a trend line. That's what I want. Without an arrow. Fuck. Man. There we go. So there's the neckline. Then I want an arrow. And so I can create a bulnario. I'm going to break through there and come up to there. Or into there. There's your oil bulnario. Now, because this is a cup and handle, you might want to know if it's a well-formed cup and handle. It is. Cup and handles are a continuation pattern. There's the cup, there's the handle, there's the neckline. It's about a 64%, 62 to 64% odds, at least historical odds, over millions of charts that we will come up and reach that target. And that's what you're looking for. You're looking for that 2/3. That 2/3 is so critical in trading. When you find trades that are somewhere around that 2/3, take them. If they're better than 2/3, jump all over them. Wow. Not getting a whole lot of traffic here today. What the hell's going on? I think this lack of volatility is seeping into the general public too. All right, well, if that's going to be it, then screw you. If you don't like the analysis, then fuck you. I'll just delete this video. So we did oil, we did the index, we did Bitcoin. What else? I guess we could do Forex. What currencies might be of interest right now? I would say that the British pound and the euro will probably be interesting, especially now that they failed on that Brexit vote. And, of course, everyone's running around wondering what they're going to do, whose heads are going to roll. Bring them to the Tower of London. Off with their heads! They just couldn't get Brexit done. PM May, man, she's just a piece of work. So we have Brexit on the table again. We've got to get Brexit done. We've got to release the shackles of Europe. Europe is just plowing towards socialism. It's going to be the death of Europe. I hope there's going to be something that will breathe some sense into them, you know? So we get the secession of the UK, and then maybe Italy, followed by France. Of course, Germany is the epicenter of it all. We've got Merkel. Friggin' loser. So I really don't understand what is going on here. Am I still broadcasting? Why isn't anybody showing up? Is it because I took a nap? Am I broadcasting? I'm going to go check to see if I'm live. Yeah, I'm live. I am live. Look at that. People don't love me anymore. All right, we'll have to do something about that. We'll have to spread the love. We'll have to spread out some love juice. pheromones, some YouTube pheromones. And attract more people. All right. So I want to thank everybody that did show up. You are good people. Everybody else, you suck. And you got the Trader of Futures analysis. Guaranteed to be the best analysis out there on the internet. Not that, you can call in on that guarantee or anything. I mean, what are you going to do? What am I going to give you back? Your time? I can't give you your time back. You've just wasted your time here. You've wasted a good 35, 40 minutes with me. So, that's that. I want to thank everybody. We'll see you next time. I must now find the stop streaming button. There it is. Adios.